Hello everyone, welcome to my channel. Today, let's do a technical analysis of Palantir stock. I am a swing investor. I will not consider the price changes of a stock 1 month later. This channel only makes short-term predictions on stock prices, usually 1 to 3 weeks as a cycle. Welcome to subscribe to this channel. Palantir stock has not adjusted downward with the semiconductor sector in the past 2 weeks, but has fluctuated within a price range, which makes the stock still in a consolidation trend technically. Last week, the stock began to pull back at $98.30, indicating that the stock felt some pressure at this position, which may be affected by the downward adjustment of other technology stocks. It can also be seen from the trading volume that some funds seem to have flowed out of the market during this period of consolidation, but these chips seem to have been digested by the bulls. After the close of April 22nd, the stock still maintained a certain height, indicating that the bulls of the stock are still trying to maintain the stock price, which also means that the bull capital that entered the market at a low level to undertake the chips has not yet exited the market. From the hourly chart of the stock, we can see that the stock formed a V-shaped bottom in March and April, but the stock price bottomed out in April, which released a larger transaction. The stock price then rebounded strongly and some chips were sold on April 16th, but this did not lead to a decline in the stock price. This means that the long capital that pushed the stock price up has digested these chips again. This also means that the stock still needs to rise further to release the profit positions at the bottom. Let's take a look at the weekly chart of the stock. From a relatively long-term perspective, the stock is repairing the price after a wave of selling, but the big drop in April destroyed the stock's price rising channel, but then the market repaired the price again. This shows that the sell-off in early April led to a large amount of funds entering the market to buy the bottom, which can also be seen from the trading volume of the stock. But it is worth noting that after a week of selling, the stock did not fall further, which means that the price repair of the stock is not over yet, and the stock price may rise further and may reach the level of $106 or even higher. But if the stock price is not higher than last week's closing price after the end of this week, then the situation will become bad. But in the current market context, the stock is more likely to rise further. Let's take a look at the position distribution data of the stock. Most of the current positions of the stock are distributed in the $77.40 to $98.30 area, and the current price of the stock is at the upper part of this area, which shows that the stock is still supported by the bulls. In the past 6 trading days, the stock has generated a large number of positions in the $89.40 to $98.30 area, but this has not caused the stock price to fall below this area, which shows that the bulls of the stock are still trying to maintain the stock price, so the stock needs to open at least one profit space upward again to release the bottom profit position. The stock has not significantly reduced in the $77.40 to $89.40 area in the past 6 trading days, which seems to prove this. Let's go back to the daily chart of the stock. Through the technical analysis of the stock, I think the stock still has reason to rise further, but the upside may be limited. The stock has accumulated a lot of profitable positions in this wave of upward trend, which will undoubtedly restrain the height of the stock price, but the question is at what position will capital sell off? Let's take a look at 2 other factors affecting the stock. The first is tariffs. Recently, comments from U.S. Treasury Secretary Scott Bessent seem to boost investor sentiment, suggesting that Trump's trade war with China may be de-escalated. Subsequently, the stock market did rebound significantly, and investor bullish sentiment seems to be recovering, but I have some predictions about Trump's tariffs. I think it is unlikely that the United States and China will reach an agreement on tariffs in the short term. Trump and Bessent's recent remarks may be to urge Beijing to return to the negotiating table as soon as possible. Another prediction may be to suggest that both sides first reduce each other's high tariffs and then negotiate. In short, this may be a short-term positive for the stock market, but a tariff agreement between the United States and China will not be reached soon, and the tariff war may escalate again at any time, so this stock market rebound may be limited. In addition, Palantir will release its first quarter earnings report on May 5th, which may bring huge fluctuations to the company's stock. Some investors have always been bullish on the stock, and the stock is also one of the hot stocks with a large number of long investors following the stock. But there are also investors who think that the stock is too expensive and its revenue does not match the stock price. So in the current overall market uncertainty, investing in the stock before May 5th needs to be more cautious to avoid a sharp reversal of the trend. But technically, there may still be trading opportunities for investors who like swing trading. There are still 8 trading days before May 5th. I think the stock may still rise to around $108 during this period, but the stock may have a pullback around $105, and then the stock may rise further. The position of $108 means that the stock still has 14% room to rise, but the price has already gained more than 60% from the lowest price in April, which will undoubtedly curb the further rise of the stock price. If the market sells off severely, the stock may enter a pullback or a downward trend. Okay, guys, this is my analysis of Palantir stock. Please share and subscribe to my channel. Thank you for watching, and see you in the next video.